Hi, this is Jim Trippon, editor of China Stock Digest, with today's China market update for Tuesday, November 10, 2009. Today, Moodys lifted China's mood with positive ratings. This is the first truly positive news since the global financial crisis started, and it's all about China. Moodys Investor Services has just boosted China's sovereign ratings outlook to positive from stable. Today's upgrade for China was the first by any major ratings agency since the global financial crisis hit late last year. Moodys said that credit fundamentals in China are likely to continue to improve as the country emerges from the global recession. And that's an important note to China critics who warned about a credit bubble there. Moodys said it would remain on the outlook for bubbles in the future. But the globally respected investor service gave China high marks for its handling of the economic crisis, saying, quote, "The Chinese authorities are successfully steering the economy through the turbulence of the global financial crisis and recession, and furthermore, they seem likely to remain vigilant to protect the systemic stability from future threats and challenges," end quote. Now, at China Stock Digest, we couldn't agree more. The results of Moodys' upgrade are in one sense only technical changes affecting bond and currency traders. For example, these rating actions affect the Chinese government's A1 foreign and local currency bond ratings, as well as the country's A1 country ceilings for foreign and local currency bank deposits, and its A1 ceilings for foreign and local currency bonds. But investors should take note. This is a broad endorsement of the stability of China's economic recovery during a global crisis. According to Moody's Senior Vice President Tom Byrne, when he told Bloomberg, quote, "The country's very strong international investment position has insulated it from the global financial crisis and reduced to a negligible level the risk that China could face a future balance of payments crisis." I tell you, we could only wish the United States would receive such a strong signal for its investors. China's recovery is also driving a recovery in Hong Kong, where China Stock Digest has significant recommended investments as well. Moody's lifted Hong Kong's credit outlook to positive from stable, while keeping the territory's credit rating at AA2. Hong Kong's high per capita income, institutional strength, separate currency, and international reserves, as well as its different legal system, all justify a higher rating than the rest of China, according to Moody's. China's banks are also in strong condition, despite worries that this year's flood of government-mandated lending could weaken their capital base. But Moodys today raised its outlook for 7 Chinese banks to positive from stable. The 7 affected banks are ICBC, which is the Industrial Commercial Bank of China, China Construction Bank, Bank of China, Agricultural Bank of China, China Development Bank, the Export-Import Bank of China, and the Agricultural Development Bank of China. Agricultural Bank was interesting because it's been regarded as one of China's weakest banks, but no longer according to Moodys. Now, investors cheered this as the Chinese ADR index rose another 3% on this news, gaining almost 9% in the past 5 trading days. This has been a China Market Update from Jim Trippon, editor of China Stock Digest, Dow Jones' #1 rated China stock newsletter. For more information on investing in China, please visit us at chinastockdigest.com.